Welcome back to the Dividend Diplomats YouTube channel. You know you're rolling with Bert and Lanny, the Dividend Diplomats. And guys, it's hard again to find an undervalued dividend stock to buy because the S&P 500 is bouncing and roaring back, staying over 4,500.
It's hard, but it's not impossible. And we're going to show you why it's not impossible today, because in this video, we are going to talk to you about a nice undervalued dividend stock to buy. But before we get into the video, everybody, smash that subscribe button and give us that thumbs up. Thank you for the support. Help us get to 20,000 YouTube subscribers, and we can bring back our WWE themed video. Isn't that right, Lanny?
Help us help you. Help us help you. Show me the money.
Yeah,
well, guys.
The next X number of minutes in this video are all going to be Jerry Maguire quotes. So get ready. We'll sneak in the undervalued metrics somewhere in the middle of it.
But we appreciate you guys for coming to the channel. You got that right. There's always an undervalued dividend stock to buy. By the way, Bert, show off the hoodie that you're wearing so everybody sees the city that you're repping right now.
Hey, are we sure? Sure we want to? Cleveland Browns right here.
Oh boy, Bengals are on deck this weekend, guys.
Yeah, OBJ is going to be in the Super Bowl. Not the finest hour for the Browns, but I guess
tough weekend for the Browns fans, that's for sure.
Greener pastures next year, but the Cavs. We'll turn it there with the positive note.
Guys, give us a thumbs up if you're a Cavs fan and you're loving this Cavs team right now.
Yeah, so Lanny, I was going to say, you said the S&P 500's been up. It is back over 4,500 at 4,521. Actually, it finished the week, I think, right at 4,500 on the dot. So it's up 21 for the week. Today was up 0.84%. Exciting stuff here, Lanny. Yeah, the market is starting to break through and just slowly start climbing back up from some of the lows that we've seen over the last few weeks.
It is. Companies are releasing earnings. Dividend increases are coming out of the woodwork. A bunch happened so far this week. Here we are recording this on a Tuesday. It's February 8th. So this video is coming out, here on February 10th. So, a lot of things are already happening this week in terms of dividend increases. But guys, we're here to look at an undervalued dividend stock. Even though the stock market is coming back, showing a lot of consecutive green days, finishing the weeks in green, we still find undervalued stock. And Bert, how do we find that?
Using the famous, the patent pending, the trademarked item out there, the Dividend Diplomats Dividend Stock Screener, where we look at three simple metrics: PE ratio less than the S&P 500, payout ratio less than 60%. But what's that perfect payout ratio, Lanny?
At 40 to 60%, brother.
That's absolutely right. That third metric is the history of increasing dividends, where we look at the 5-year average dividend growth rate and the number of consecutive years a company has increased its dividend. And last but not least, that bonus metric, the dividend yield, is what we also look at after the company passes the first three metrics.
Now you listen up, brother. It's time to step in the ring and look at an undervalued dividend stock, Jack. So guys, here we are in this video. We're diving into Cummins stock, ticker symbol CMI. And who is Cummins? Well, Cummins designs, manufactures, and distributes engines, filtration, and power generation products. Big competitors in their industry is John Deere, Caterpillar, Rockwell. Think of big players making big machinery that powers equipment.
And going on that theme, if you look at their last earnings release, what you are going to see are big increases from revenue and big increases from net income. Their revenue was $24 billion. It was 21% higher than it was in 2020. Net income just as strong, $2.1 billion. Up $300 million from 2020, or a 17% increase. So massive double-digit percent increases on the top line and the bottom line for Cummins. So strong earnings numbers. Lanny, why don't you tell us about that strong balance sheet and some of the key metrics there?
Got it. You got it. And also like to touch on, they did buy about 4 to 5 million shares year over year. So obviously that's great for their earnings per share metric. But yeah, getting into that strong balance sheet. Typically, when you think of big machinery, a lot of nuts and bolts, a lot of equipment, you think, okay, they probably take on a lot of debt, right? Well, not so much with Cummins. Cummins likes to stay nimble. They like to call themselves Jack be nimble, Jack be quick. We'll jump over this dividend diplomat portfolio here because their current ratio, which is current assets over current liabilities, you love it, Bert, is 1.73 times. Typically, we want to see at least over 1. This one, it can cover their current obligations with current assets 1.73 times over. But wait, there's more because we got to get into that quick ratio. It's essentially the same calculation as the current ratio, except from the current assets, you remove the inventory that's on the balance sheet. Typically, I like to see 0.5 to 0.75 at least in this metric. Again, Cummins, far surpasses and exceeds that expectation. Their quick ratio is actually still over 1 at 1.12 times, aka they're very liquid with limited current obligations.
Yeah, that's strong. So again, strong income statement, strong balance sheet. That's what we like to see. And from a dividend growth perspective, their last dividend increase was very solid. It was a nice 7.4% increase. So we'll see a little bit later on when we get into the stock screener how that compares to the company's 5-year average growth rate. So keep that in mind. The last increase was 7.4%. So Lanny, let's kick it off here. Let's run them through the stock screener. You want to? Yeah.
Grab your coffee, grab your beer, grab your cereal, grab your loved ones, I like to say, because we're about to dive into the stock screener metrics. So Cummins, again, ticker symbol CMI. You can't see me John Cena style here. Stock price for CMI is $223.51. Now, analysts are expecting earnings to be about $20.27. That price to earnings ratio is only 11 times forward earnings, Bert.
Yeah, that is well below the broader market, which right now has a PE ratio in the mid 20s. So yeah, huge signs of undervaluation. You are on something else tonight, Lanny. That is for certain. Is it the coffee? Is it the beer? We'll find out.
Or is it both?
Oh man, just swivel them together, take a few swigs. I think you're good to go.
Coffee stouts are really good.
Yeah, they are homemade ones too. That's even better. Half and half. A new meaning for half and half. That is for certain. All right, second metric here, payout ratio. Annual dividend after that increase, $5.80. Divide that by the $20.27 for EPS. That gives you a payout ratio of 28.61%. Plenty of room to keep increasing that dividend going forward, well below our perfect payout ratio range. Yeah, not concerned about the dividend safety one bit here. That is for certain. Why don't you tell us about that third metric, Lanny?
Well, that third metric, that dividend growth, they've had 16 plus years of consistently raising that dividend, 16 plus years at an average dividend growth rate of 7%, which to me is so consistent. Reminds me of a little Johnson & Johnson, which I know that dividend king holds a special spot in you and your wife's portfolio.
It does. Special place in our heart, our portfolio, our medicine cabinets, everywhere in our house. And that's why we love Johnson & Johnson. But we're here talking about Cummins, not Johnson & Johnson. Strong dividend growth right there for Cummins. That is what it is all about.
So Bert, I talked about the dividend growth. You need to bring it home now. How does that dividend yield stack up with a 7% growth rate?
It is a very nice, more than double the S&P 500 right now of 2.59%. Well, not more than double, right about double the S&P 500. Very, very solid. It's what I like to see right there for them. I know you do too. You're getting a nice premium there at 2.59% plus the 7% dividend growth rate. That gives you a near 10% dividend growth factor.
I thought you were about to say it's what's for dinner. Now, I guess it's almost spot on too. If you just look at the last increase at 7.4% and the yield 2.6, And with that low dividend payout ratio, I feel like a dividend increase this May of 2022 is going to be strong. And the reason why that growth rate, I think, is still a little low, the average growth rate, is because during the pandemic, they only increased it like 3 to 4% during 2020. So you really have a drag on one of those years. At least they increased it during that pandemic 2020 year. But again, Cummins really came back hard in 2021 with a 7.4% increase.
Yep. So let's summarize the metrics here. PE ratio 11.03, payout ratio 28.61%, 5-year dividend growth rate 7%, right in line with that last increase. 16 years of consecutive dividend increases with a 2.59%. So let's talk about the performance for the company for a little bit. I mean, it's undervalued for a reason. How has it performed over the last year to date, Lanny, and the last 52 weeks?
Last 52 weeks, dating back to last February, they're down almost 9%. This year in 2022, Cummins stock is actually down or up almost 2%. So, again, kind of underperforming the overall market, which is always a good thing because you're more than likely will exceed some sort of expectation here then.
Yeah, in the long run, there'll be some years where it definitely beats the market. And just for perspective, over the last 52 weeks, the S&P 500 is up 15.6%. And year to date, the S&P 500, hey, it's down 5.73%. So when you stretch it out, Cummins is lagging this year. It's actually beating, but not because it's just crushing performance. It's because the S&P 500 is a little down.
So, guys, there you have it. It's Cummins. I already own over 30 shares of Cummins, but I would not mind adding to my current position if I see it in that $215 range. Can we get a little price, a little price depression to come down on this stock right now?
You're like, I wouldn't like it at 223.51, but at 223, I'm buying thousands.
I'm all in. But how
No,
about
I think
everybody
that's pretty
else?
reasonable there. I mean, what's funny is let's see if it follows what happens with T-Row, where you said you would buy at 170, and then within a week it was down to 150, and you were adding like you said it would. So hey, it's very possible. $8 per share, not very much. I think that's very reasonable.
Yeah, I'm not asking for gold nuggets here.
No, you're asking for McNuggets, a nice 10-pack for $2. But
No.
yeah, I don't own any Cummins. I'm trying not to add a ton of dividend stocks to my portfolio. I'd like to keep building my positions that I already own. That being said, the metrics are looking great. So if it falls, if it were to go even further, hit 200, I'd have to at least buy some
You
shares.
have to at least buy 10 shares.
I was gonna say 5, but 10, maybe not. Depends how much T-Row I'm gonna keep buying, because that's been the stock that I've been adding.
Depends how many kidneys Bert has left.
Yeah, I have 15 kidneys left. You guys figure out the math. So that's check out our portfolio and see how I've been able to buy so many dividend stocks over the years.
So guys, what do you guys think of Cummins stock? What other stocks are you buying right now in this stock market? Are you having a lot of success finding that undervalued dividend stock to buy? Again, we appreciate you guys. Give this video a thumbs up if you haven't already. Subscribe to our channel. Bert, any other parting words for the community?
Keep buying income producing assets. That's what it's all about. Don't really need to say much more. That is the name of the game. Let's go. Let's get to financial freedom. And you know what, Lanny? And that's the bottom line, because the dividend diplomat said so.
You heard it from Bert. Keep building that passive income stream. That was Bert the Hurt, and this was Lanny from the Dividend Diplomats. Over and out.